All right, let's talk about SoFi. This stock is everywhere right now, right? So much chatter, so much hype. We're going to cut through all that noise. Today, it's about building a real, data driven trading blueprint. So here's the big question. Is SoFi just another social media darling, a flash in the pan, or is there a genuine opportunity here for a smart trader? That's what we're here to figure out. Okay, here's how we're going to break it down. First, the bigger picture. Why is everyone talking about this thing? Then we'll get into the hard data. From there, we'll lay out a strategic trading blueprint with two distinct ways in, and we'll finish up with a simple checklist every disciplined investor should have. All right, let's jump right in. Before we even think about a trading plan, we've got to understand the why. What's all the buzz about with SoFi? Well, for starters, the retail crowd is a huge part of the story. Over on Wall Street Bets, SoFi is ranked as the #8 most upvoted stock for 2026. And look, this isn't your typical meme stock craze. It's being talked about in the same breath as some really big established growth companies. That tells you there's a real belief in its long-term game. And hey, that optimism has been rewarded. I mean, yeah, it's been a bumpy ride lately, but zoom out over the last year, SoFi is still up a very solid 70%. If you're a long-term holder, you know this kind of volatility is just part of the process. And that really brings us to a key idea from the source material. In the bigger picture, all of this is just noise. Think about it. The daily ups and downs, the hype, it's all just noise. For us, to trade this thing smart, we have to tune all of that out and zero in on the data. So let's get to that data, because this is where things get really interesting. You can see this massive tug of war happening behind the scenes. You've got some huge players making massive bets on SoFi, and others betting just as hard that it's going to fall. So on one side of the ring, you've got the bears. Right now, almost 10% of SoFi's entire free float is being shorted. That's a ton of money betting that the price is heading south. But check this out. At the exact same time all that shorting is going on, one single institutional player just dropped $85.5 million on a buy order. That's a huge, huge vote of confidence going in the exact opposite direction. And it wasn't just a one-off thing. Look at the other big transactions from today. You've got more multi-million-dollar buys here, and they just completely dwarf the selling. The biggest sell? Not even $1 million. So when you see the price maybe taking a hit, but the big money, the institutional money is pouring in like this, that's a really powerful signal. It tells you the pros are seeing some serious value. And you know where this whole conflict is perfectly captured? The options market. It's almost a dead even, 50-50 split between people betting it'll go up and people betting it'll go down. The market has absolutely no consensus on where SoFi is headed. And you know what? That kind of uncertainty is exactly where a disciplined plan gives you a massive edge. So how do you trade in a market that's this divided? Well, you don't guess. You don't flip a coin. You build a plan with clear, unemotional rules. So let's do that. Let's build that blueprint. Okay, before we get into the nitty-gritty of the strategies, we need to be on the same page with two super important concepts, support and resistance. Just think of support as a floor. It's a price level where buyers tend to show up and stop the stock from falling further. And resistance? That's a ceiling. It's a price where sellers tend to step in and take their profits. Simple as that. Everything from here on out is built on these two ideas. All right, so using those key levels, the source material gives us two clear paths for a potential bullish trade. Basically, you've got two different approaches here. The first is the breakout entry. This is for people who want to see the stock prove itself by smashing through that resistance ceiling. The second is the pullback to support. This is more for the patient trader, waiting for the price to drop down to that support floor to get in at a better price. So let's break down the breakout play. Step 1. You need to see the price close for the day above the $28 resistance level. That's your trigger. Step 2. After that close, you enter the trade. Step 3. You set your stop loss just below that breakout zone, somewhere between 26.80 and 27. From there, you're targeting 29.50, and after that, potentially $32 and beyond. Okay. Now for the second strategy, the support bounce. For this play, you're waiting for the price to come down to that support level around 26.40. But, and this is super important, you don't just buy it because it hits the number. You wait for confirmation. You're looking for what's called a bullish rejection candle. It's a signal on the chart, usually a candle with a long tail on the bottom, that shows buyers are jumping in and fighting back hard. That's your signal to enter. Your stop loss goes just below that support, maybe around 25.70. And your first target? that $28 resistance level we were just talking about. Look, having a plan is one thing, but knowing when the conditions are perfect, when the odds are really in your favor, that's a whole other level. And that brings us to maybe the most important part of this whole thing, the checklist. Think of this as your go/no-go checklist for a bullish setup. Ask yourself, is the price staying above that crucial support zone? Are we making a series of higher lows? That's a classic uptrend signal. When the stock moves up, is it on higher volume? That shows real buying conviction. And are you seeing those reversal patterns right at support? It's simple. The more of these boxes you can tick, the higher the probability of your trade working out. So there you have it. We've gone from all the internet noise to a clear, disciplined, data-driven blueprint. This is how you can approach a stock like SoFi with a real strategy, not just a gut feeling. We've laid out the conflicting data, we've defined the key levels, and we've given you two distinct plans with clear rules. The blueprint is right in front of you. The only question left is, what's your next move?